welcome to our Q2 Town Hall. As we have shared previously, we've shifted this up a bit. So with the move to Swirlds Labs, we're also bringing on board more of the Hedera Governing Council members to participate in this and give you all a richer view of what's happening in the ecosystem. So I know you are all familiar with Dr. Leemon Baird. Hi, Leemon, how are you?
Hi, doing well, thanks.
And those of you who joined us on our last call also know Brett McDowell, who is the chair of the Hedera Governing Council.
Hello, everybody. Happy to be here again.
And then we also have the aforementioned Scott Thiel. So Scott is the founder of TOKO. He's also DLA Piper's representative on the council and a board member. So hello, Scott.
Good morning from Hong Kong. Great to be here.
All right. We have a lot of questions, so we're going to dive right in. Leemon, the first one is for you. What's progress on windows of downtime when upgrading the network?
Oh, well, it's 3 or 4 minutes. So the last one was 3 or 4 minutes. We've had several upgrades now that have been 3 or 4 minutes. So hopefully it will continue to be like that in the future and maybe even get faster. But yeah, we've had these fast upgrades now for a while, which is nice.
All right, fast upgrades and fast answers. We are rocking and rolling here. Okay, Brett, this next one is for you. All DLTs must have a path to financial self-sustainability. Does Hedera believe that it does? And what is that path?
I'm going to interrupt the flow of quick answers. So I thought I'd want to unpack this a little bit, give some context. So you could answer this question lots of different ways. Self-sustainability of what? So if we think about Hedera network as the 100-year network, you know, and less focus on necessarily the idea of a 100-year company, but the 100-year network, then I think we can focus on what is self-sustaining, you know, traffic, levels of traffic. I think what they're getting at here is what's the transactions per second level that we would need to see before we, kind of the stakeholders and the observers of the network, could know that it's self-sustaining. You know, what is the target for self-sustainability with the network? Because there's other things you could measure. You could look at, well, what about some of the investments we want to make in the short term? How do we want to bootstrap and grow? Software development. Those things are variable. Those are going to vary quite a bit, you know, over that 100-year period, for instance. Not to mention the next 10 years, probably. So just answering the question on what makes the network sustainable, worked with some of my colleagues and came up with a model. So if you assume that the Hedera network, let's say, is 100 nodes at that time, and that all of the traffic coming in, the network fees that are being paid from the different services consumed, is kind of an even split between like HCS, which is a less expensive transaction, so less revenue, or HTS calls, which is a little bit more expensive, a little bit more revenue, then it really comes down to around 300 transactions per second. So at 300 TPS, we're fairly comfortable that we've modeled it accurately, and that would cover 100 nodes running at today's specs, which are a little intense, right? So we have a high bar for our technical specifications of our nodes, also a high bar for the sustained throughput and bandwidth. So at all of those costs, that's the answer.
All right, Brett, thank you for walking us through that. Scott, this is a $1 billion question. How do you feel about current market conditions and how Hedera is performing?
Yeah, great. I'm going to turn it into a multi-trillion-dollar question by pivoting perhaps away from the simple question around sort of cryptocurrency pricing generally across the market. And I mean, I think if I explore our own journey and the journey I see, lots of other, particularly corporates and enterprises that we're working with, the journey around DLT adoption is really just getting going. And what we've seen is many different ways of measuring, success. And again, like I guess to Brett's similar question, there are different ways of taking these questions and different ways of measuring it. And for an industry that's not that old, I've already seen acronyms come and go in terms of their relative importance and how one measures, the value of or importance or success indeed of a network. So from a Hedera perspective, what I'm seeing is increased adoption of what I would call mission critical high value use cases. They are typically slower to incubate, they're slower to test, they're slower to adopt. But if you want to change the world, there tends to be a lead time in doing that, and that's kind of the journey we've been on. What we're seeing with Hedera is the adoption of the Hedera protocol based on some of the fundamental sort of technology attributes of that protocol, and so that steady growth in the number of interesting and mission critical applications is definitely happening. Not to be outdone with the industry loving an acronym, I've been creating my own, and it's called TVR. And we've heard others. Brett was just talking about TPS. We've seen a lot of talk about TVL in the context of DeFi and locked crypto and locked assets on protocols. To me, I think what we're going to see is, when it comes to large scale, high value assets and mission critical projects running on a particular protocol, the question is, which one do they trust? And so TVR, total value represented, the total value of things, assets, whether they're real world or investment products or whatever they might be, when people start to trust, substantial portions of the world's GDP to a particular blockchain, which one are they going to use? And so I think TVR, the total value represented, is going to be an important one. And it's obviously something, and I'll come on to it one of the later questions. It's something that we've been working towards around the TOKO project as well, with putting high value things on a protocol. So that's for me a very positive message, and notwithstanding current market conditions, that I'm seeing an awful lot of positive adoption for the Hedera protocol.
All right, so now I see why you got into the trillions quite quickly. Yeah. Leemon, a lot of folks in the community are waiting for community nodes. Do you expect to publish a Docker or something similar around the implementation of those?
Oh yeah, we have. So this is great. So I'm also very much looking forward to community nodes, but even before we have the community nodes, you can now download a Docker that has everything you need, and you just run it. We've had this for a while now. So our actual mainnet runs, it's all Dockerized, which makes it easy for us to deploy to all, the council members need to be able to do it easily. So we've already Dockerized everything. Even our updates are really cool. The way it goes out is that a transaction goes out, the computers automatically download various things from the internet, recompile things, and then build a Docker image. And then on the date when we're supposed to do the update, each computer automatically switches to that new Docker image that computer itself had built. Very cool stuff for automating. But what you can play with right now is a single system where a Docker image, just with 2 command line commands, you can install it and then you can run it. And it has a mainnet node. So you are creating your own network, your own Hedera network, a Hashgraph network with one node, which is your computer. And then it also has a mirror node, and the two are talking to each other. And so you can do queries on your own one node network you just created. And then it also has HashScan.io, the equivalent. So it has this nice scanner program, web interface that lets you see all the transactions and what's going on this little fake network you've created. And then it even has Hash.io, so you can do these integrations with other tools that send various transactions in that way. So the entire ecosystem is all inside of one Docker, and you launch it with one command line, one sentence in the command line. And I've put into chat where you can go get that. It's been on GitHub. It's under the Hashgraph organization, like lots of our fun stuff is, and it's called Hedera Local Node, hedera-local.node. And so this is cool. So our goal from the very beginning has been to make it very easy for people to stand up a new node. You just type in 1 or 2 lines and you can stand up a new node, and to make it very easy to upgrade, where the node downloads its own new information. It builds a new Docker image from scratch, and it just works. So play with it. Let us know how you like it. Let us know anything we can do to make it improved. But I love that the community can play with this and build your own networks and play with them. And of course, the reason you'd want to do it mainly is if you're building software that needs to talk to our network, you can put a network running on your laptop and just have your software that you're developing talk to the network on your laptop, and you have complete control of the network. That's one of the best use cases for it. But it's also just fun to play with. So both.
All right. Well, we're looking forward to some good community feedback on that. Thank you, Leemon. Brett, this next one is for you. Can you talk about the importance of ESG? And for those not familiar with the acronym, ESG stands for environmental, social, and governance, to the Hedera ecosystem. And perhaps share some examples of some ESG projects on Hedera and differentiators that are pulling projects to build on Hedera if they are ESG focused.
Sure. Let me, if I forget any component of that question, please remind me. Right up front, I'd say, from my perspective, people, I'm going to assume some level of familiarity with what we've published and written about. So you've probably seen a fair number of podcasts and blog posts and case studies around the ESG space. But just to remind you, here are some projects. We have our Guardian open source project, which we are committing a fair amount of resources building out. So what that does is really provides standards-based, using verifiable credentials and decentralized identifier standards. So and as well as the token taxonomy framework standards that we were a part of leading. So it's standards-based application kind of glue code, if you will, functionality on top of the Hedera network for end-to-end lifecycle track and trace of your carbon credits, your renewable energy credits. So that functionality is a differentiator for sure, being so tightly tied to Hedera. Another project that we have, we have a number of companies that are contributing to that project. We've got Envision and Miko contributing to that project. And most of our kind of ESG case studies are in some way taking advantage of the Guardian capability. But even before someone discovers the Guardian capabilities of Hedera, they're being attracted to us because of reports like the UCL report published by the IEEE that identifies us as kind of the greenest or most sustainable in terms of low energy, per transaction. And they came up with a great energy per transaction model. It's the first time an academic study was done that did that level of analysis. And so that is an attraction as well, because we've got this carbon, neutral to negative network that people, would love to build their ESG solution on. And of course, all the other reasons anyone else wants to build on Hedera, it's less expensive, fair ordering, high speed and bandwidth. So we've got people building on Hedera like Dovu with the marketplaces, Cryptsy, building a platform for people to build their own solutions in the space. Miko contributing kind of the UI around the Guardian and giving a visualization to those that are doing track and trace for their tokens and their credits. Civic Ledger is doing great work around lifecycle management of the tokenization of water rights and water consumption. So essentially, you can see the pattern playing out. It's tokenization of fill in the blank, and then track and trace functionality, full life cycle, auditable, extremely affordable, and immutable. So that's what's attracting, and so that's kind of a reminder of what we've already been doing. Some things that people might not know that I want to get into. So we're global innovator members of the World Economic Forum. And if you're familiar at all with the World Economic Forum and their role in the global economy, they really are leading ESG. In a lot of ways, they are at the tip of the spear for ESG. So the partnership we have there and the relationships that we've developed there, I think are going to be important for Hedera overall in this space. And then looking inward at the council, the Corporate Utilization Committee, which is really focused on use cases. There are other use cases we talk about, but ESG on DLT is the primary use case that people want to talk about. It's the one use case that everyone on that council can see themselves participating in. And it really is the kind of the first one that's getting a lot of cross-council collaboration. And TOKO is one of the companies leading in this space, working with other council members like ServiceNow. Avery Dennison is another leader in this space, building these capabilities for people to track their carbon footprint and then do something about it. Tokenize offsets and report that, be compliant with that. And I could go on and on. We could do a whole hour just on ESG, but I don't think I can overstate the importance of ESG with Hedera. We really think it's one of the killer apps of a public ledger, and we're very well positioned to be the preferred platform for that app.
Thanks, Brett. And I think it is incredible to see, everyone from startups who have really, focused on a key area to council members who are thinking about this across their business. As you mentioned, we have a number of Gossip About Gossip podcasts on this topic. So if you're not tired of me after the top of the hour, I would encourage you to go watch some of those because those projects are doing amazing things. Scott, for you, I think this is interesting. The community has heard Mance and Leemon talk about the need for Hedera to be interoperable with other chains. Hedera is a general purpose network. So from your perspective, as someone who has been building on the network, why is interoperability important when other chains may, be slower or less secure or not offer some of the same benefits as Hedera?
Yeah, it's a good question, and I'll maybe take it from two slightly different perspectives. Going back to the non-DLT world for a moment, that we don't see many or indeed any industries or technologies where there is one player. There doesn't tend to be one dominant player. There's not one cloud service provider, for example, for the planet today. So there is just a reality of an expectation. And in fact, I think if we did, we'd probably end up with a less rich, less competitive, less exciting environment in which innovation can happen. So I think there is a reality that we're always going to end up with several networks. Maybe not as many as there are today, perhaps, but certainly a number of. So that reality has to be taken into account with if that is the case. There is a need for being able to interoperate with and to deal with assets that may move from one protocol to the next. And that then from the other perspective in terms of what we're doing with TOKO has been very important. If you're wanting to take a digital virtual asset, a representation of say a piece of real estate, for example, what's the journey that thing wants to go on? Where does it need to go? What exchanges might it need to end up on? And if those exchanges require or haven't currently integrated or are currently using another chain, there is a need to consider portability of asset, cross-chain and interoperability, for example. So it is really important. I think the other thing to note is when it comes to technology adoption, particularly in the large sort of corporate environment, there is always going to be a question on the procurement sheet. Are we going to find ourselves here with a technology lock-in situation where if we build here, we can never move and we can never communicate with? All of us as consumers find the frustrations of that when we're stuck on maybe one particular mobile phone device that won't talk to one from another network, for example. So I think there are parallels in other technologies. So I'd categorize it as being something where give people the ability to move across and to interoperate with, so give them that functionality, but then in providing the best protocol, it gives them limited need to want to do so unless where it's necessary. So it's that kind of treat them well enough to allow them to leave or to move across networks, but also treat them so well that they generally don't want to.
Thank you. Leemon, is there a minimum amount of HBAR that will be needed for staking?
Sure, 0. No, the staking system is really designed to be easy. There is no minimum for how much you need to stake. There is no slashing and bonding or bonding and slashing. There is no lockup. There are no ways you lose your HBARs. There's no ways they freeze up. You don't even have to do anything when you've staked your account and then some more HBARs come into your account. They're just automatically staked as they come into your account. And then if you want to spend them, you can spend them. And then they're just automatically less being staked after your account balance goes down. And so all you need to do is just set up your account to be staking, and then it stakes as HBARs come in. So the minimum is 0. Don't get a whole lot of rewards with 0, but the minimum is 0. This, of course, is all in HIP 406. Look at that if you want details. It's not turned on yet, but there was great community involvement in discussing 406, and it got approved, and we're looking forward to it.
Fantastic. All right, Brett, next one is for you. If the regulatory authorities in the U.S. continue to, to dither or outright turn against distributed ledgers, would Hedera consider incorporating in a more progressive jurisdiction? If not, why not?
So it is a great question. And it's whoever our stakeholder is who came up with this question, they're not the first to ask this question. So I'll point out that this question has been raised by council members, and it is something that we have an eye on. Now, I'd point something else out. If you look at our council members, yes, Hedera Hashgraph LLC is a Delaware LLC. But the majority of council members, right? You'll see it on most of our web pages. You'll see us say, owned and operated by the council members. So that's Hedera. Hedera is owned and operated by the council members. The vast majority of those are not headquartered in the United States. So I can actually answer the second question even more clearly, like, if not, why not? I don't know why our council would have any sort of existential commitment to operating legally in the United States. I think that they're going to be looking at where is the best place to operate the network or components of the ecosystem, and take it from there. But what I will also say is that is not our approach, right? We are not looking for the exit. In quite the contrary, we are deeply engaging with US regulators and policymakers and the administration, or to try to help the US government. They are all trying to figure out how to best regulate this industry. And from the conversations I have, I feel that they, in general, are trying to support this industry. I know a lot of the headlines don't read that way, and I'm not speaking for everyone in DC who's grabbing those headlines, but in general, the people really doing the work, like the staffers that are writing the bills, they're trying to make this work for the industry while protecting consumers. So I think the best thing we can do is engage, be a source of valid, actionable metrics and data so that they make the most informed decisions. And if that happens, well, then we don't have to worry too much about where we happen to be incorporated.
All right. Thank you, Brett. Scott, can you share with us the status of, can you give us some updates on TOKO, and when might we see tokenized assets on the network?
Sure. And if Brett thought he could do a long session on ESG, I could go for days on this topic. try and pick highlights. Look, it's a really exciting time. The journey we've been on for what is now, in excess of 3 years. We're the sort of point in the market cycle, in the evolution and the future of finance that we've been aiming at for those sort of 3, even maybe 4 years. The world's now turning in front of us, so it's a very exciting time in terms of what's happening around people looking to digitize, tokenize a wide range of assets across a wide range of geographies. There's a particular comment there about when will we see things tokenized. We are already tokenizing assets. Sometimes they are confidential, and you don't necessarily see or hear about them. But one that we did put out a press release about that I'll just touch on, because I think it's an exciting kind of glimpse of the vision of the sort of future of finance piece. We worked on a debt financing project for a mining operation, and did a tokenized debt finance, so effectively representing that loan and the interest payments associated with that using a HDS token, with additional HDS tokens being paid as the interest on that loan. Now, one of the things that was interesting around that deal was it was actually a US-based owner or asset owner. The asset itself was in Eastern Europe. It was a calcium mining operation in Croatia. We used a Hong Kong private company to do the debt issuance, and the investors were globally based. Now, if you look at traditional capital raising type activities, they don't tend to look like that. But what the technology is beginning to enable is the ability to do that. Then what was then interesting, those tokens were minted and issued into a regulated virtual asset accounts with one of our custodian partners that we work very closely with, that's integrated into TOKO. And we saw very rapidly, secondary market trading happening on a digital sort of OTC over the counter basis. Now, that's starting to look very much, it's one deal, and it hasn't got all of the moving pieces that we'll certainly see in the end, but it was indeed an end-to-end token issuance, secondary market trading environment on a HTS token for a financial instrument linked to a real-world asset. So it's one I can talk about because we got the approvals from everyone to do so. But it's an example of the sorts of things we're working on now. If I look at the pipeline of what we are working on across a range of assets and geographies, it is really exciting in terms of what I think we'll be announcing over the next kind of 6 months in terms of deals that'll be completed, and the regulatory frameworks. That, just touching on the sort of previous question as well around sort of regulation, is it pro, is it negative, and we're seeing a lot of ebb and flow around the world around some of those issues. But I think the general trend is to become more supportive. Regulation is good. I'm a recently recovered lawyer. Regulation is good for the industry. People don't necessarily perceive it that way, but regulation provides protections. It provides certainty for people to actually do things, and we're seeing a rise in regulation, which I think will also support more people getting comfortable moving into this market.
All right, amazing, Scott, and I agree. I think there's probably at least an hour of things for us to talk about there.
Yeah.
Leemon, is there a way to build a public or private network on Hedera that would thwart ransomware attacks? And if so, do you know of any companies currently doing this?
Not really. I mean, you couldn't really do that. So ransomware attacks, you could talk about trying to attack it two different ways. First of all, people hack into our networks, people hack into our offices and get into our computers and lock up your data and then hold it for ransom. The real solution is we need better computer security to stop that. And the whole industry acknowledges that computer security today is terrible. There are problems with how we use passwords for everything. There are problems with zero-day bugs in the code itself. I think that the solution is to go to more sophisticated ways of doing authentication that actually involves ledgers and things. So Hedera can help with that. And for the code having bugs, really, I think formal methods where you have computer checkable proofs that your code is correct has got to be the way forward. I think decades from now, all software will do it. We're just very slowly starting to do it. Hedera is trying to lead the way in our own software for that, but we're far from that. Then you could say on the other side, what about the ransom? Cryptocurrencies are untraceable. I think most ransoms are done with Bitcoin today. It's untraceable. Okay, well, that's a problem. You could say, well, couldn't we fix it by creating a new token on top of Hedera that has no privacy? That's all KYC'd. Everyone knows the owner of each account, and you have to prove who the owner is, and there's absolutely no privacy. Wouldn't that help? Well, not really. An attacker would just never demand a ransom using your new token. So you could create a token that wouldn't be used for ransoms, but nobody would ever use that token. So it doesn't help. So no, ledgers can't directly help with this. What we really need are formal methods, and then maybe also some improvements in authentication, which DIDs and other things, ledgers maybe play a role in. That's all.
All right, yes. An arms race on the security side. Speaking of, Brett, before joining Hedera, you were with the FIDO Alliance. Is Hedera involved in any way with the FIDO Alliance?
I want to touch on Leemon's last answer and tie into this a bit, because he mentioned authentication and what we can do about ransomware. I would just point people to, I won't go into this now, but our chain abuse announcement. So the way the National Security Council and the National Economic Council, the White House, they seem to be sort of tag teaming and leading the effort around the executive order, which is this whole of government approach to figure out what to do and how to regulate the DLT space. And so I've had some conversations, and I've learned a bit about the National Security Council's perspective on this, and ransomware is very much top of mind. They're publishing on it. They're taking action on it. And one of the things they've done in many of their hearings, they've heard from folks, like the stakeholders behind the Chain Abuse Project, to say, analytics can do a lot more than you think, right? So yes, you can say it's untraceable at first glance, but then these other security firms and researchers are able to come in, and that's where they've been able to collect a lot and prosecute quite a bit of this. So, I just wanted to point out that Hedera is engaged with that community and supporting that, and you can read more about that on our blog announcing the Chain Abuse Partnership. So back to just core authentication. Are we involved in FIDO Alliance? So as you pointed out, I used to work at the FIDO Alliance. I was the founding executive director and chairman of the FIDO Alliance for a number of years in my career. Very proud and happy of the work that we've done there, and very keen to see some of their announcements just the past month or so. Google announcing Passkey, which is FIDO technology, in all of their platform devices, Android, and Apple announcing support for Passkey, which is FIDO, in all of their iOS and Mac platforms. What I'd point out is FIDO is using public key cryptography for authentication. That was it, interoperable public key cryptography. We had public key cryptography, wasn't interoperable, and also some deployment and metadata things. So, but it's really a Web 2.0 solution. So FIDO is really living in the Web 2 space. And yes, I have a connection with the folks that are still running the FIDO Alliance. I've been in touch with them recently, kind of exploring where they are. One of the things that happened back in 2015 is we spun up a blockchain study group to look at, was there a connection between FIDO and blockchain? And we've also back then looked at, decentralized identity and the connection there, and making sure authentication used, FIDO keys instead of maybe ledger keys. That work is still untackled, largely untackled, is bringing those two worlds together. So right now, I would say the FIDO Alliance is still very much focused on getting out these Web 2 solutions and killing passwords in the Web 2 space and the mobile application space. But I think they're going to get their attention on Web 3. And when they do, I would expect Hedera to be a significant stakeholder in that collaboration.
Thanks, Brett. Yes, still lots to do in securing Web 2. Scott, based on the achievements that Hedera has made so far, what one or two things do you think that Hedera is missing or needs to do before being truly recognized and perhaps dominant in the crypto space?
Yeah, I want to take a slight tangent to the way to this question in some respects, because I think what is actually needed for that kind of level of adoption or recognition is the maturity of the development community, actually, in many respects. So if I look at some of what we've seen over the last, particularly 12 to 18 months, some of which has been a little frothy in the market, obviously, we're not necessarily seeing applications that actually need the type of technology attributes that Hedera offers. So I think it's not so much a question of what does Hedera necessarily need to do or to build or to add, although maybe I think Brett might have some observations on this after I'm done. But actually for the sort of developer community, particularly the enterprise end, to start actually committing to building those mission critical high value things, which when you then decide, well, back to my TVR point, when I do that, which protocol do I trust? Oh, it's the one that's got, the best ABFT level consensus. Oh, it's the one that can scale so I don't find myself with a problem in terms of scalability and future-proofing my long-term mission critical application. Oh, it's the one that's got, the trusted governing council running the, the decentralization, decentralized validator nodes. It's got, the various technology features that do make Hedera unique. So in many respects, I think it's there already. What is now needed is for the industry to come and start building some of those. And they are, as I've alluded to in other questions, we're seeing a lot of that sort of enterprise adoption now starting to happen. These are not the quickest things to build or deploy or to scale, but when they do happen and when people are making those technology choices, we are already seeing, the attributes of Hedera being critical in those conversations.
Yeah, what I would add is, in addition to that, what it really comes down is the validation of what, right? So we validated the technology, we validated the governance model. We got to validate the business model, right? So we need large enterprises to save money or make money with a solution in production that's using a public DLT. And what we still are seeing in the large enterprises, it's just so familiar to cloud computing. And I used to go to these, IT security I worked in IT security standards my whole life, and I'd go to these meetings and people would just be mocking cloud. It's like, no, we will never, big iron will never move to the cloud. There's only one way to do security right, and that's on-prem. And now it's laughable when you look back at it. So there's going to be those breakthrough enterprises that just go for it. Like some CIO is going to bet kind of their career on this, just like with cloud, and they're going to rally the troops and they're going to prove that they were right. And that's going to be the way it works for Web3, I suspect. I don't have a crystal ball, but I wouldn't be surprised if that happens. And so Hedera, building this wonderful coalition of top enterprises filled with those type of people like Scott, people like Andy, who's on the call, then we're really in that position to help them do that. And that is kind of the way some of these conversations go, right? People are saying, all right, I'm trying to, help me build the case, help me build my POC, help me build my business case. I'm the champion for bringing this technology into my big company. Big companies move slowly, but that's the work we do. That people don't necessarily see it on our website or at meetups, but that's a big part of the work we do, is helping that internal champion make that case inside their own company.
Absolutely. Thanks, Brett. Leemon, once full nodes resolve the order of transactions, how are those transactions stitched together?
I see. So there's two different things here. There's the consensus, the mainnet, and what it does is it puts the transactions in order, and then every single node processes the transactions in the same order and updates the state. So if you send someone some HBARs, it reduces your balance and increases their balance when it processes that transaction. Or all the nodes decide that transaction is invalid, and when it processes it, nothing happens, one or the other. When we have done that, putting them in order like that, when the state is updated, we write the state to disk periodically. That's great. But we also want the mirror nodes to know what this consensus order was. And so we write the transactions with the records that say what happened to the disk. And so you have the transactions being processed, and after each one is processed, there's a record saying, did it succeed or did it fail? And what happened when it happened? If it was a smart contract, there's a lot of extra information. This all gets put into the record. And so then we have the record file. And the record file, we just start a new one every 2 seconds. And it says, over the last 2 seconds, tell me all the transactions that had reached consensus and were processed and all of the records for those. And that's what's in the record file. The record files are tied to each other with hashes, sort of like a blockchain, I suppose. And they're digitally signed by the whole network. That's goes beyond what a blockchain would do. And so this then ends up going to the mirror nodes, and they know it's true because of the signatures, and then they know what has happened. So you could say that's sort of like a blockchain. There's other things too that are sort of like blocks that are different from that. We also just have a group of transactions bound together in a group called an event, which is what we use for gossiping. We gossip in chunks of an event. That's a chunk of transactions that are being gossiped around. That's sort of like a block. And that event knows the hashes of its parents, of the last one created by the same person, the last one you received. Those hashes give Hashgraph its name. And then we also just have extra information, sidecar information that we're in the process of adding that will also get written to the disk. So there's lots of different things. All the different things we're writing all have chained by hashes. So they're like a Hashgraph or like a blockchain in that way. And also are all signed by the network, which makes them stronger than a blockchain in that way. And so we do all those different things. So that was a small question that kind of gave a big answer, but we've been doing this from the beginning and it has worked out great. It allows us to separate the work of consensus and handling the transactions from the work of being a mirror node that remembers everything for all of history. Very useful separation.
Great. Thank you, Leemon, for that explanation. Brett, on the last town hall, you talked about how the council members are going slowly to recruit new council members. What's the plan for that recruitment effort, and also to have those council members actually have use cases on the network?
May have to go back and watch that video, see if I actually used the word slowly. But yeah. So exactly, what I was going for was, thoughtfully considered. So I get it. I think that especially the people that might be attending this town hall are kind of used to a lot of kind of associating momentum of the project with increase of council members. And a lot of us kind of did, we associated that too before. So this time around, when I get the same question, I'm going to try to unpack that, bring some transparency into how people are thinking about it now on the council. So first of all, just a quick fact update. So the process of becoming a council member has changed. And now every new council member must basically be voted on twice. They have to be voted on by the membership committee, which is a nominating committee. And then they have to be finally approved by full vote of the council. And so what's happened is that membership committee is really trying to take the time that it takes. I mean, not deliberately go slowly, but to not rush getting their strategy together around who they want on the council. So I think it's more around who do we want to join us on this council? And sometime in the past, when we hit around maybe 21, 22, 23 council members, I would say that's when maybe the perspective of our members shifted a little bit away from conflating momentum of the project with momentum of the growth of the council. They really felt like they had adequate critical mass, and it was more about, okay, let's really focus on that new enterprise's use case. What is their use case? How are they going to use the network? And that does add time. It's not a sales cycle per se, but it's more, we want to make sure that you're going to be a user of the network as best we can before putting you on the council. And also looking for strategic connections, because it won't be long, if we kept the old pace up, it wouldn't be long before the council will be full. And now what are you going to do? You can't add more council. I've been in that situation. In previous organizations, they changed the bylaws so they could add more people because they got full. And then they changed the bylaws to add more people because they got full again. So I think what the membership committee is doing is wise, it's deliberate, and they're really trying to say, who do we want? And they're not rushing out to hit their quota.
Thank you, Brett, for explaining that change. I think that's a really important one. Scott, does it benefit Hedera adoption for HBAR prices to stay low? Do higher HBAR prices result in increased costs for startups and others building on the network?
This is a relatively simple one, because the cost of consumption of services on the network is denominated in USD. Then it's really irrelevant, the price of the HBAR in terms of the cost of consuming those services. So no, it doesn't really help or hinder. I mean, I think to flip that question the other way, what is important is, again, when people are looking at making a commitment to building an application that's going to be using those Hedera services, that they have cost certainty, and they don't have a situation as we've seen with others during sort of rising markets where the cost of actually operating is going up substantially because of the appreciation of the native crypto. So denominating in USD, which many people have their cost base in USD, is obviously important. So no, it doesn't really help or hinder.
Absolutely. Okay, and Leemon, follow-up question to that. With the current market cap of Hedera low with respect to the financial resources of potentially malicious actors, if you think about big actors, how does the council ensure that a third stake of the coins is not already currently being accumulated by a bad actor?
So a cool thing about proof of stake is that when an attacker needs to do a cost-benefit analysis on an attack, the cost to them is, in a very real sense, going to be the price of the HBAR at the time they do the attack, not earlier. They might have accumulated earlier, but there's an opportunity cost. So there's a cost-benefit analysis. The cost is how much did you pay to buy the coins, but also what are you giving up? Because when you do this attack, if you destroy the network, the coins now have zero value. You've lost whatever value you were holding in those coins. And so the cost to an attacker is, in a very real sense, the value of the coins on the day they do the attack, because they're giving up that value. The benefit to the attacker depends on, well, how valuable of a scam can you do by attacking the network, by forking it or by doing a double spend. You won't be able to get away with it for very long before the whole network collapses. So you'd better be able to squeeze a lot of billions of value out of it in that very, very short time. Or it could be an indirect one. Maybe it's an attacker who is a world government that just hates all cryptocurrencies and wants to attack them all. So The good thing about a proof of stake system is that those two numbers tend to go up and down together. When the price is low, the attack costs less, but also has less value. When the price is high, the attack costs more and has more value. And so the two kind of go together, and it kind of scales itself. It becomes a self-improving system. As the network as a whole becomes more valuable, it becomes harder to do the attack, and the attack is more valuable, and they kind of balance out forever, which is nice. I would also point out that there are world actors, world governments that could have been more aggressive against cryptocurrency than they have been. The biggest example for me is that China could have done something really bad with Bitcoin by nationalizing the machines and reprogramming them to extend the shorter of the two branches that are the longest, rather than the longest. That one little change would have not only crashed Bitcoin, it would have prevented anyone from fixing it without running something basically radically different. And they didn't do it. Instead, they just kicked out all the miners, which I said at the time was absolutely the best thing possible for Bitcoin, was to be kicked out, because China really could have destroyed it. And they weren't going down that path, which is interesting, I find. So who knows what other actors are doing? But I think that the question that started with, given the current price, isn't really relevant, which is a nice thing about proof of stake. It kind of is self-adjusting. And as the value goes up and down, the value of the cost of the attack goes up and down, the value of the attack goes up and down with it. And so it's kind of self-scaling. Nice aspect of proof of stake.
All right, thanks, Leemon. Okay, Brett, I know we've talked a lot about regulators. One more here. The US Senate recently outlined a proposed broad regulation for crypto, under which most assets would qualify as commodities under the purview of the CFTC. Is Hedera confident that under the Senate outlines that HBAR would not qualify as a regulated security? And was there anything included in those proposed regulations that was unexpected or might require a change in the current strategy or implementation?
Sure, long question. This one might be a shorter answer. So I think this question is citing the Leemon bill. And I would say that what I said earlier, we're engaged. We're engaging in the process. And we were engaged in the Leemon bill. And we were very pleased with how open they were to our input. And in general, how collaborative they are. We're members of other trade associations like the Blockchain Association, Digital Chamber of Commerce. So there are lots of ways to collaborate with legislators as they try to figure out the best way to do this. So what I will say is that we're engaged. And it's something that I see our council members getting more and more value out of and getting more and more involved in. We also responded to a recent RFI from the Office of Science and Technology Policy around the climate impact of DLT. And in doing that, we were able to get a number of our ESG experts on the council to participate in that work group and do that collaboratively. So this is kind of a new thing. This is, or at least it's a milestone in how involved the council members are in this kind of activity. And we're going to continue to do more of this going forward. We think it's very important to engage in industry governance, not just our own network governance.
Absolutely. Thanks, Brett. And I think that goes back to Scott's point about collaboration within the industry as well. One more for you, Brett, or perhaps Scott as well. Does Hedera have the ability to grant or revoke HBAR transactions of individual account holders using a KYC key operation?
I think we might all end up needing to say something on this because Leemon's the right person to actually answer this question. But I'm curious about why they're even making that last reference in their question, the KYC key operation. But this is, I guess there's a couple of questions that always come up on these town halls. This is one, because I'm sure, if the answer could possibly be yes, it would be a concern. So the answer is simply no. The council cannot change a transaction. There are a number of things the council can't do. I think Leemon has said them numerous times, but yes, we're here to confirm that's right. The council can't cancel or revoke a transaction, regardless of the operation that they might be suggesting. Leemon, you know why they're mentioning a KYC key operation?
Yes, I think that in the past there's been some confusion. If you mint your own token, you are the one creating a new token type. You're allowed to set various things on it, including requirements for KYC, whatever you want to do. And it's transparent. If people don't like the way you've set it up, they don't have to use it. But you can set up some things like that. And people think, oh no, I see a transaction with the name KYC in it. I think somehow Hedera is going to do this to me on my HBARs. It's not the same thing. So please look at the thing that Zenobia put into the chat. It is not something to worry about. Hedera cannot freeze one of the accounts. Our code does not allow the council to do that. There is no signature the council can give that our current code would allow it to freeze an account or to pull HBARs out of an account unless the council has the keys on that account. Unless you give us your keys, we cannot take your HBARs. It just doesn't happen, or your tokens. And so I think people get confused. When you create your own token type, you have lots of things that you can do with it and lots of powers you can give yourself. And then people can look at what powers you've given yourself and decide whether to use it. But for the rest of the system, there is no power that we are keeping. And that's intentional. I don't think it would be at all a good idea to do that.
Yeah.
Maybe I'll just jump in and give an example of the powers that we give ourselves, for want of a better word, in TOKO. And so we're obviously minting tokens that have various rights and attributes associated. But let me take a simple example. If somebody did decide to self-custody that token off chain or whatever, and they put it in a wallet or a cold storage of their own, and then they lost that physical device or the private keys or whatever else. One of the things we've done in terms of investor protection, token holder protection, and indeed in discussing things with our insurers is provide a sort of a burn and reissue functionality within that token. Now, to Leemon's point, if people don't like us to have that right, they won't use our system. But obviously, from an investor point of view, we then run that. We run that through a renewed kind of identification of the investor. We can go and track and say, well, you really are the right person. We can see you've just lost this. We can see you were the owner of it. We're gonna kill off that token, which is itself an interesting process, and issue you a new one. So that's an example of where, to Leemon's point, it's not happening at the Hedera level, but within the ecosystem that we're building. We felt that was a useful protection for investors, and the insurers agreed with it. So that's an example of that kind of above Hedera kind of functionality that we've built within TOKO.
Scott, to your earlier point, I think we could spend an hour at least talking about all of the different functionality and the use cases that you all are building on TOKO. So thank you for sharing that. I'm also going to ask you about another council member. Avery Dennison made an announcement that they expect to be running billions of transactions on mainnet. Do you have an update on behalf of them that you could share?
I do. So Pradeep, who I sit on the Hedera board with, we know well, and I just had an update from Pradeep. He's one of the key sort of stakeholders in the ATMA IO project. So it's a very, very exciting project. Really, really looking forward to seeing it go live and start to ramp up. The answer to the question is there is an expectation of the transaction rate starting to increase over the course of July. I think that what the announcement was, I think around June. Again, enterprises are slow, checks, balances, slow to get going, but once they get going, they tend to have momentum. So there's an expectation that's going to be ramping up over the course of July and thereafter.
All right, thank you. And we are going to wrap with one last question for Leemon. Leemon, can you provide more details about implementation of the recently approved HIP 415, which is the introduction of blocks? And there are a number of details that they're asking about, but I think you can probably articulate those certainly better than I.
Okay, and I love the question. The question is, wait a second. This HIP says that you're going to make Hedera look like a blockchain by writing out all this extra information. Every transaction is going to be written out to a file along with a record that describes what happened. All that information is going to be hashed, and each of these blocks will contain the hash of the previous block. So it'll be chained hashes, and there'll be a bunch of signatures on each of these blocks. And then you'll be able to do queries to Hedera, and you'll say, tell me the millionth block on your blockchain. Well, we don't have a blockchain, but we'll tell you the millionth record file that was streamed out. And it goes all the way back to Genesis. So, for years and years now, 3 or 4 years, we have it going back. And it will now look like a blockchain going all the way back to the beginning. And so the question was, no, wait, how much is that going to slow you down? Can you still do 10,000 TPS if you have to do all this extra work? I love the question, because we've been doing that work from day one. We've always been writing out these files and hashing them and including the hash of one in the next one and adding all these signatures on them. We've been doing that from the beginning. That's why the mirror nodes can be trusted, or a mirror node can trust that it has the right data. And so all we're doing with this HIP is exposing it to the world to make it look like it's a blockchain. Now, when you say, tell me the millionth block in your blockchain, we go to the millionth file, but the files have always been written out. Or if you say, tell me the hash of your millionth block, or tell me the timestamp on your millionth block, we just give you the hash or the timestamp of that file. It just gives you a new way to query what we already had and gives a new view of it, but it's powerful because it lets us interoperate with software that is hard-coded to say, tell me the millionth block. I will not work unless you are a blockchain with a millionth block. Now we're a blockchain with a millionth block. And so it's purely on making this more interoperable and easier to use. It does not change any of the work that we're doing because we've been doing that work from day one. It will not slow us down at all. We do not have to test if it will slow us down. We've been doing it from the beginning.
All right, Leemon. So fair to say, looks like a blockchain, walks like a blockchain, performs like a hash graph.
That's right.
Wait, Zenobia, you must be from marketing.
I tried. Well, everyone, I want to thank you. For those in the US, if you are starting your long holiday weekend, please enjoy your time off. For those who've dialed in from all over the world, we always appreciate you tuning in. We look forward to these. We love giving you updates. We hope to have a great variety, great cast of folks coming on so that you get some different perspectives. We hope that's helpful as we continue on this path to decentralization, and so that you can see some of these things really coming to life. So Scott, Brett, Leemon, thank you so much. And everyone out there, be well.
Oh, thank you. Have a good day.
Bye-bye.